thanks everyone for being here. As mentioned, John Lagman from Bloomberg. Now, obviously, Bloomberg and CME Group have had a long collaborative history. For those of you who may not be so versed in a lot of their products, especially crypto and overall trading products and TradFi, Tim, maybe I'll hand it over to you to maybe give a more lengthy, intro about yourself and even more importantly, CME Group.
Great, thanks, John. So as they said, Tim McCourt with the CME Group, and we're one of the world's leading derivatives exchanges. We have futures and options on futures and swaps in all major asset classes, trading as a U.S. regulated futures exchange. We've been in the crypto space for about 7 years from a tradable product side, about 9 years all in. Really happy to be here at TOKEN2049. And I have to say, certainly a first following two stellar F1 drivers.
Yep.
Haven't quite seen an exodus out of this room, but we'll do our best, John and I here.
Yeah, yeah, we'll give it a go. So, prior to this, I obviously was going to do a little bit of research. I was actually telling Tim. Ironically, back in 2010, we actually worked together. So prior to Bloomberg, I was actually an FX options trader for a long time. So we worked at what was then, or still is, actually no, they changed their name back to NatWest.
Yeah.
They're the Royal Bank of Scotland. So in addition, what I also found out that I did not know, and I apologize, I should, CME Group actually has been active in crypto for about a decade.
Yep.
And stuff. So, given that you've been through a few cycles and whatnot, I mean, any kind of, commentary or view or insights on kind of how the market's kind of evolved and whatnot? Yeah.
Yeah, it's certainly been an interesting ride for ourselves at CME Group as well as the market and our clients. Our foray into the crypto space was the advent with our partner CF Benchmarks around the Bitcoin reference rate, which is the underlying to our financially settled Bitcoin futures at CME Group. And it was really about building the market. This is something that CME does well as an almost 200-year-old institution. We've built some other markets for risk management and innovative products. And the market's really come a long way. I think back to 7 years ago, a lot of the questions CME Group was getting at the time was, why are we in this, right? And I still kind of say, I'm not sure why TradFi has become sort of an insult. But it is something that we're responsible for, as a regulated venue offering regulated products. We were playing a bit of the long game, right, which I think has served us well over the last 7 years, where we could be a little bit more patient. We held ourselves to a higher standard. The market and our clients held us to a higher standard. And now here we are today. The institutional adoption and the retail participation in our markets has continued to accelerate. We're at record levels of trading and open interest here in the back half of 2024. It's been a very fun ride. The team's really enjoyed it. But I think the ability to introduce products to the market that help with access or bona fide risk management to something is still relatively new as cryptocurrency and Bitcoin and Ether in the global capital markets has been something that the clients and the marketplace has really appreciated.
Great. So, you've talked a little bit about the evolution. Obviously, this fireside chat's on the institutional horizon of digital assets. So, maybe if you could touch upon, institutional participation. Now, if you want to talk about it in, say, overall terms, or, you guys obviously handle many different segments of the institutional market. So either way, if you want to break it down to certain player types or just institutional participation as a whole.
Yeah, for sure, John. So what's interesting is if you'd asked me that question, I don't know, maybe 2 or 3 years ago, I would have said something more along the lines of that we do have institutional type flows, but not necessarily your traditional institutions. With the advent of crypto hedge funds, crypto asset managers, crypto trading firms, these are all people familiar with traditional markets that had sort of migrated to crypto, and we were seeing the personality of institutions. But the last several years, we've seen institutional adoption continue to accelerate with asset managers, real money accounts, hedge funds, banks, active individuals, and now certainly with the advent of the ETFs in the space in the US, that's been a huge kind of upwelling of interest in terms of how people can access the market. And a lot of that flow comes back to CME. When we look at our futures product as the leading futures exchange for Bitcoin in terms of open interest, there's a lot of gravity around the risk management and the price discovery process that happens at CME Group. And that's really seen as now the market's becoming more and more interrelated for institutions. And I think the one thing to note that I think is interesting is if you think about the crypto markets, it's probably the one exception where if you look at traditional asset classes and traditional markets, they really started at the wholesaler level, and then at some point they figured out how to get it to the individual. Crypto's kind of the reverse. It was really driven by the active individual trading community, those people who wanted to access these exciting markets, wanted to manage their risk, and now the wholesale community is sort of finally catching up more than a decade later. So it's a pretty interesting phenomenon.
Yeah. Another interesting phenomenon, especially if you look at maybe end of last year when we started having the move higher in, say, Bitcoin, for example, was basically crypto-based ETFs and stuff. So, I'd be curious to see, was there any kind of insights you saw on how it might have impacted the derivative markets that CME is, obviously a part of? What's been the kind of impact, or how you guys have seen the ETF business flow into your business?
Yeah, it's a great question. And my background is, before joining CME, I'm an equity index trader, sort of at my core. And I think there's, like I described the equity market, there's a very strong interrelatedness, or there's a high degree of symbiotic relationship between the ETF market and the futures market. And certainly the Bitcoin ETFs are no exception to that. We've had the futures-based ETF that ProShares pioneered with CME Futures for several years. The spot ETFs came back online in January with Bitcoin and ETH thereafter. But the futures are a great tool for that. And a lot of times folks think it's an either-or choice, but it's not. These instruments go hand in glove. And what I mean with that, if you're a trading firm, you could deploy sort of very traditional strategies of, long ETF, short future, or vice versa, to try and extrapolate some of the arbitrage that might be there, or the carry of the product. But also what's interesting is the futures are a critical part, because the spot-based ETFs are pretty new. And I say this as a former equity trader, it's not necessarily the most efficient creation redemption process. Creating these new ETFs can be a bit cumbersome. There's a fair amount of price slippage in terms of handing over the cash and then getting the ETF on the next trading day. But with futures and some of the mechanisms that we have, whether it's the basis trade against the close or trading at the market close in the futures contract, people are using futures as almost a synthetic way to create and redeem ETFs, which is increasing velocity. And it's not surprising that, as you saw, that assets under management, or the AUM of the ETF, rise with the introduction. We've also saw a pretty strong upwelling of futures, because the whole ecosystem is growing. And I think that the fact that we have a strong relationship between futures, ETF, OTC, and spot trading, that's going to be a great development for the market for many years to come.
We kind of focus on Bitcoin. Any kind of observations? It's interesting. A lot of people I talk to, traditional finance types. I mean, obviously, I work with both crypto and FX, and everyone's kind of had this kind of face level, or a very initial level view that the ETH ETF really didn't, maybe in comparison to how Bitcoin kind of shot up. From your own kind of analysis, maybe link back to the futures that are trading against ETH. Is there any kind of things that you might have seen that maybe either reinforces this or says something opposite?
Yeah, that's a great question. I think certainly, the ETH ETF had the I don't know, maybe unfortunate of going second, right? Mm-hmm. So the recency bias of how successful both the futures-based and spot-based Bitcoin ETFs were certainly made it hard on a comparative basis. But, the ETH ETFs are doing pretty well in the grand scheme of things of ETF launches. But I think, John, what's the underpinning of your question that I think about, and is something that we've also seen in our market, whether it's across the standard sized Bitcoin and ETH futures, or the more individually sized micro Bitcoin and micro Ether contracts, is the market participants, for some reason, and maybe this is an extension of the personality of the digital assets themselves, Bitcoin is a little bit more of a buy and hold. People are sort of allocating or investing or hedging their digital asset portfolio with futures at CME Group. But ETH has always been the one that people really like to trade. I think it has a slightly different personality, a little bit more velocity to that market. And I think that's what we're seeing play out in the ETF, because people are measuring sort of the ETF success by AUM growth. But I think ETH ETF is displaying some of that same characteristic, where it's people are trading it, but they're not necessarily holding it for the long term. It might be an intraday expression of risk, or they just sort of like having it in their account and trading it, but they're still running more of the longer term strategies with Bitcoin, which tends to help bolster AUM or open interest on the future side. So I think we're seeing similar behaviors, but certainly both, as some of the most popular crypto or the digital assets out there, they have their own place. And in a few months, in the grand scheme of things of an ETF, it's still very early days.
Cool. So, I know in addition to maybe people trading liquid markets and crypto, we probably have people that are, say, business development, maybe product managers. As someone who has to go through that whole process of thinking of an idea of a new product, trying to figure out, why or even when or who are we targeting, and then, really even deciding, again, that when should we launch it. Could you kind of like maybe give us some kind of background as to maybe what you can tell us, your whole kind of process, maybe from start to finish, and finish just being even a new start to something else, right? Yeah.
No, for sure. So I think one thing to keep in mind at CME Group is the main driver of innovation and product development at CME Group is customer demand. Those customers that are clearly articulating a demand or a risk management function is a great source of inspiration. And that was the original genesis for Bitcoin when we started looking at the reference rate development back in 2015. And that demand, for example, was they wanted a clear articulation of what is the for certain price of Bitcoin in US dollar terms once a day. So that's why we worked to develop the index with Crypto Facilities, now CF Benchmarks, and we have the constituent exchanges contributing their prices because it's important that the futures market or the derivatives market has to converge with the underlying asset. So the last Friday of the month when the futures expire, they're settling into the Bitcoin reference rate, and it's actually where that is the prevailing spot market is trading at the time. So we had to lay a lot of the groundwork sometimes for products, and Bitcoin is no exception. We had to invest into developing the index. We had it out there for a year before we wrapped it around the future. And now it's more of trying to work with folks to understand what's next, how should we be thinking about additional products where we introduce the micro size contracts, the basis contract. We have options on Bitcoin and Ether, both standard and micro size. We're soon to launch one of my favorite named products, the Bitcoin Friday Future, which is also known as the BFF. So that's something we're having a little bit of fun with for your new BFF is the Bitcoin Friday Future at CME. But it's really about, for us, being that regulated venue, offering regulated products in a transparent, efficient manner, is that it has to be regulated. So as a U.S. exchange, we are only introducing products where we also have that regulatory clarity and certainty. And at present, we have that only on Bitcoin and ETH. That's something where we're a CFTC regulated exchange. So that is also a bit of a governor on our product development, specifically for crypto. But all asset classes, we can only bring those products to market that comport with the U.S. regulation.
Okay, now I know I need to be cognizant of time, but it was actually something interesting you said that I was having a discussion with someone last night. In between a very long night, by the way, but what I can remember, it was actually something very key. So he was telling and I wonder if this is kind of how you approach it. He said, the key with products is sometimes what people forget is they have the solution, but there's no actual problem that they're solving. Do you actually try to, even, because it sounds like you go to your clients, you find some kind of gap that they have, and obviously probably make sure how many clients that, which is something we do at Bloomberg, figuring out, how big a gap that is, because you can't just make something for one person, so to speak. I mean, is there a very extensive, is that something where I guess your sales groups, your account managers, you rely heavily, especially you not being in Asia?
Yeah, absolutely. It's something where I think I agree with your point. A lot of times in the product development, you see firms or institutions or other exchanges and platforms, they're sort of a hammer looking for a nail, right?
Exactly.
And they're trying to design what they may think is maybe academically curious or interesting, which could be true. But if no one's going to trade it or if no one's going to use it, there could be a fatal flaw of that product, which will sort of make it almost dead on arrival. So that's why for us, in trying to deliver products in response to that clearly articulated customer demand, is extensive validation across the spectrum. We're talking to our market making firms, end clients, asset managers, hedge funds, our retail broker partners, those participants in the market that say, hey, will you use this? It's such an easy and obvious question, but you'd be surprised how many people don't ask it. And it's, if you wouldn't use it, what should we do such that you could use it? And sort of iterating on that product design and making sure that we really deliver something that is the most appealing to most of the market, because that's what make markets trade. You need multiple personas in the market that almost vehemently disagree over what tick is going to happen next. Yep. If everyone liked one product and only served one feature or one segment, you'd have a lopsided, one-sided market, and everyone would be staring into sort of the abyss, waiting for the other side to show up. But if you can design it in a way that incorporates most of those personalities or those personas of the market, you'll get people vehemently disagreeing, which is great for the efficient risk transfer process.
Great. So one thing I was, you mentioned, very, I guess, key maybe for the next thing I want to talk about. Obviously, you have like 50 reference rates. The BFF, is the latest thing coming out. The Friday futures. Anything else you have on the horizon? One thing I remember, I was kind of joking with you. 0-day to expiry options, or anything that you can also kind of mention that may come out, maybe it won't.
Yeah, that's a great question. So certainly Bitcoin Friday Future, the BFF, is getting a lot of our attention. That's something that we're working very closely with a lot of our retail partners. All of you should check it out if you haven't already. And the fact that it's just sort of that weekly Friday end of week close, it really doesn't have some of the same basis exposure that you would even with a month-long future, so it'll track spot a little bit better. We do have options at CME that are expiring every day of the week, Sunday or Monday through Friday. Mm-hmm. That is still a constraint that we have. We don't have weekend trading yet. But we're still kind of working in the Bitcoin and Ether lane. We're working and looking at things of, should we introduce physically settled contracts? Could we introduce additional order types or even additional reference rates that may comport, kind of, John, to your question of what is sort of the APAC close versus London versus New York, and trying just to make sure we're continuing to develop a global offering. And that's where all the client feedback is great. If any of you guys have ideas or things that we should be working on, we're all ears. But it's really just sort of focusing on those incremental order types and something as exciting as the BFF.
Yeah, and if you need to find out, if you're very new to what CME does and you want to be able to see what they do, very big, I guess, how to say, suggestion, get a Bloomberg terminal. Okay. Type CRYP go and you'll see kind of CME. So sorry.
No, that's right.
No, I'm not trying to shield. I'm just, just giving friendly advice, not company-wide advice. Now, luckily, we still have a couple of minutes. Any other last items that you want to talk about, whether it's like not necessarily just CME related, say product rollouts or any other things you see on the horizon, other people are doing that, that kind of interests you?
Yeah, I think it continues to be an amazing space when being in an event such as this at TOKEN2049, seeing a lot of the innovation. We're constantly looking to get additional constituent exchanges to be part of the Bitcoin reference rate. We're really committed to trying to make sure that we are focusing on a really wide swath of that ecosystem, but still remaining, it's important to us that it's crypto versus fiat transactions that we're looking at for the Bitcoin reference rate. And it's something when we look out across the horizon, to me, the conversations have changed with clients, I think, over the last few months, the last few years, and it's gone from sort of, why is CME doing crypto to, well, okay, it seems to be going, but is it for me? So now, like, how do I actually make this part of my portfolio? How much should I be allocating as a function of risk? How do I extract some of that financing rate that's embedded in the future versus the ETF? So the fact that we're seeing more complex or maybe even more traditional strategies and questions coming from our clients, I'm very optimistic about what the future has, not only for risk management at CME Group, but certainly the industry as a whole. It's an exciting time. It's hard to believe it's been 7 years since we launched our first future. And I'm very, very optimistic and look forward to what the next 7 and longer has in store for us at CME Group. Okay,
well, great. Thanks for having a chat. Actually, one thing I was thinking right then, do you actually get that kind of question sometimes I get from clients? What are the other guys doing? Have they adopted yet? And things like that. But, you don't have to answer that. But again, thanks everyone for taking the time to, hear Tim and myself speak.